Good afternoon, everybody, and welcome. So I think everybody's aware this is a panel about cross-border M&A, and I think we're really going to focus our discussion really on current topics that we're seeing in M&A in Brazil, particularly from the foreign investor perspective, and focusing a lot of what we're seeing in light of the changes in regulation and politics and economics, which are all coming together in Brazil right now. If you look at the trend, for those, I know you've had discussions this morning, but this just sort of repeats some of the themes, I think. Over the last several years, if you look at, let's say, the last 3 years in Brazil, economically, we've seen a dip in GDP, which is this year has come back to a positive growth. We've seen sort of a rise in inflation, sort of topping out at the beginning of 2016. Now inflation is falling. Interest rates have rose up to 2016 again. Now we're falling again. And we had a Brazilian currency, which was somewhat attractive to investors, going up almost 4 to 1 in 16, dropping now to around stabilizing around 3.1 to 1. Okay. Also, you have the Temer administration coming in August of 2016 following the impeachment of Dilma. This administration, in order to get economic policy in a more, conservative mode, is promising significant reforms. Already we've seen limits on budget spending. As you're well aware of, there's a lot of talk right now. Hopefully there'll be pension reform. It's obviously going through the government right now. We're seeing different variations of what could be. A lot of international focus on that reform. Education reform is being proposed, tax reform, and even reforms as to ownership of land by foreigners in the agribusiness sector. Also, just in terms of looking in the future, and these are all things that I think when I think about our clients, whether they're private equity clients or strategics looking at Brazil, there's an election that's coming in 2018. There's a lot of uncertainty about that election. I think if you look statistically right now, I read a statistic that less than 20% of the Brazilian population identify with a specific party at this point. If you sort of look at that and how investors may look at risk and structured transactions, I think that these are important impacts. So I think as we get started, I'd like to speak to some of our panelists to sort of address generally what they're seeing, and they'll go specifically. I'll introduce these our panelists. We have Paulo Vera from Vera Sandi and Barbosa. We have Lucas Lira from the Internal Legal Department of Anheuser-Busch InBev. We have Adriano Dauto from Demarest Advogados, and Peter Fursey from Debevoise and Plimpton. I guess to start off, also what I'm seeing, but I'd like to your sense of, because of Lava Jato, which is car wash, there are a lot of issues we're seeing, particularly on structuring. What occurs to me is the issues on joint and several liability, particularly for allegations of corruption with companies and their affiliates, and how that's being thought of by foreign investors. When I speak to some of the firms in Brazil that we work with, and with some of our clients that are looking for assets, and I think we all know, at least from my understanding, a lot of the assets that are for sale right now in Brazil are assets by some of the companies that are very much involved in Lava Jato and car wash. And there's a lot of assets in the market, but there's a lot of questions how to safeguard against the corruption charges, and particularly these companies' liquidity. So I know, in Brazilian purposes, there's gray areas as to the incurrence of liabilities. So maybe we could start off talking a little about what we're seeing in structures. I've heard people propose maybe sale of some of these assets through public company transactions on the stock exchange in a way of safeguarding future buyers from the liabilities. But maybe, I don't know, Paulo, if you could start maybe talking about some of what you're seeing in terms of transaction structuring or effects on the reform, and particularly Lava Jato or car wash, in the transactions you've been working on or advising clients on.
Hello. Yeah. Thank you very much. It's a pleasure to be here. I think that the first thing that I would like to do is to go back to Ministro Barroso's first speech today, when he, first of all, he mentioned all the good things that have happened in the past few years, and that we cannot forget that And I think that we have to try to understand what is, and he mentioned a few things. He mentioned the strength of the institutions. He mentioned also the end of the hyperinflation, and that made me think of a parallel with what's happening now with the Lava Jato. Actually, if you think that the schemes which were put together and that were unearthed by the Ministério Público and which are now being judged by the judiciary, they basically they show the size of the Brazilian state. The Brazilian state not only, I mean, it acts as a regulator, but it also acts as an entrepreneur. And also, if you are dependent, and most of the companies are dependent on long-term financing, you also have to rely on the National Development Bank and BNDES, Banco do Brasil, Caixa. So the scheme that was actually discovered, it shows that in the end of the day, some companies were profiting or were either giving bribes or making illegal contributions, illegal donations, in order to get advantages that they would not otherwise have. They were making sure that legislation that were on their interest were being passed. They were getting licenses that they wouldn't get otherwise. They were getting contracts that they wouldn't get otherwise. They were taking advantage of getting a big chunk of the market and creating cartels and creating monopolies. So on its, if you think about that and whether there is a possibility of creating a virtual circle from what has happened, we have the chance of really making a tremendous impact in the Brazilian economy. And that goes back. I mean, the only time when we have seen something like that was actually in the opening up of the Brazilian economy during the 90s, and at the end, with the stability of the economy and the end of hyperinflation. Because basically what happened then, I was starting my career, I mean, the beginning of the 90s, but basically what you were able to see was a transparent, for the first time you could try to understand the balance sheet of the companies, which is something that you could not understand before. With hyperinflation, you would look at the balance sheet of the company and you would actually not understand what was happening. You could not be sure whether that would be the reflection of reality and the normal conduct of business or not, whether those assets were real, whether those credits were real. And I think that if you draw a parallel with what is going on today and how broad these schemes were in terms of getting contracts that shouldn't be awarded, licenses. So getting a chunk of the market that some companies were not supposed to get, if this whole scheme is really comes to an end, that should mean that there should be a tremendous impact on the results.
So you're saying, I think what we've heard a lot of clients saying is Lava Jato and the sale of these strategic assets is an opportunity at the end of the day, right?
I think that is part of, yes, that is definitely part of it, because some companies are already under economic duress because of the Lava Jato, and they're having to sell the assets. So we have a secondary market that is just happening.
That never existed before, and theoretically investors that felt that they were not being treated equally, so local Brazilian companies, because they couldn't get the financing, they felt they were disadvantaged, now need to come in because the liquidity is not there. These are significant companies with very good assets, but they can't use those assets, they can't get financing, so the assets are stuck. People would argue, I've heard the argument is, there's even this percentage of the GDP growth which is being inhibited because these companies can't do anything. So ultimately, if we can find a way to structure transactions from a risk perspective, then this basically gets the economy growing again and brings in maybe international players who maybe with a sort of relevance to dealing with FCPA and other ways of doing business, cleanses the system or changes the system how we do business in Brazil.
Absolutely. I think that there are I think that you're absolutely right. There are two, but I think that this should happen in two steps. From an M&A perspective, that it means that when you take a look at the target, you have to understand when you see the results of a company, you have to understand how much of that comes from operating in the white and how much of that comes from foul play. How much of that is natural, how much of that is not natural. And the other thing that you have to understand is how are you going to operate that company on the day-to-day? Because these are two different things. Because the first thing is what is the reality and what should be the reality of that company in normal business conditions. And the other thing is how do I operate on the day-to-day? How do I live? How do I live with the company that I'm buying, and how do I live with the legacy of that company? You see, how do I transform? How do I change things in order to be able that I will have productivity, I will have profitability, and I'll take care of the costs, and at the same time, I'm going to operate in accordance with all the anti-corruption rules. Not easy.
No, that's fair. I think, especially how to think about it. I go back to liquidity issues. You have Brazilian banks like Bradesco and Itaú that are sort of, my sense, are sort of frozen. They're not really granting many loans in many industries at this point. They're sort of looking at their balance sheet, evaluating what their ultimate exposure is going to be. And that obviously inhibits growth and stops companies from doing things. Then you have foreign lenders that need to understand the risks involved in lending, and they're sort of quiet. Maybe you'll see some strategic lenders come in through private equity or hedge coming in because they're willing to tolerate the risk, but that's obviously very expensive money, and it all sort of enters into how people sort of structure transactions. I guess, Paolo, one question. When you have, again, we're going to focus mostly on foreign clients because I think that's really very interesting in light of structuring these transactions and looking at new buyers. When you look at Lava Jato and sort of what's been happening in sort of corruption charges, are there certain things you're thinking about when you're advising your foreign clients that are potentially thinking of structuring transactions to think about or structuring these transactions? I mean, obviously we go through a due diligence process, but once you reach that and you sort of get a comfort level, is there any advice or certain structures that you're seeing that people are talking about specifically?
Yes, I think that what is interesting, I mean, there is always in Brazil, I mean, because Brazil has a cyclical economy, that has a tremendous impact in the M&A industry. That means that most of the times, whenever we are in a high tide market and there is a boom in the economy, sometimes you get processes that they get speeded up, and sometimes the kind of evaluation which are being made, you leave due diligence on a secondary level, and that is something that absolutely it cannot be done today. I mean, the types of contingencies and liabilities which have been created lately, and especially with much more stringent rules, with the Ministério Público today that, I mean, we were talking about this in the panels before. Sometimes you have not only liabilities which fall upon the company, but also upon the shareholder and also the directors. So in the end of the day, you have personal liabilities. And how do you deal with that? You have to make sure that you understand what these problems are, and you have to be sure how do you live with this legacy. So in some cases, there is no way of dealing with it apart from having the company going into judicial recuperation, for example. Otherwise you cannot draw a line between what was done by the previous administration of the company and what will be done by the acquirer of the company. Otherwise, you have to deal with it in the way that you structure the contract and with the escrow accounts. But it is very important that we all bear in mind that it's not. I mean, before, when you thought about the due diligence, it was very much about the effect on the price. And I think that today is very much like being sure that you have a radar in order to be able to navigate the company after the acquisition, and to be able that you are going to put in place practices in terms of environmental practices, in terms of compliance, in terms of governance, which were not in place before. So again, before it was just a matter of how we would evaluate the company and fix the price. And I think that today is very much how do you deal with the liabilities and the contingencies that you will have to live with after the acquisition.
Yeah, I think you have a whole, we up until Lavajato, we had all issues about labor, tax, everybody struggled when you transactions, and these are big issues for companies making. Now you have the whole additional layer of the corruption and money laundering, and that just adds a level of complexity. And I guess the question also, we're struggling with some of our transactions, joint and several liability at the affiliate level, and the gray area about that in the Brazilian law, where there's people, I've spoken to a lot of different law firms, there's a lot of people gray about that, and it's unclear. I'm going to move on to speak to Lucas to sort of guide us a little as sort of different perspective, a little in-house counsel, big operations, done big acquisitions. Curious from your perspective, when you're looking at acquisitions for internal compliance, how you go about, given what you're seeing, obviously you're seeing in Brazil, but we're seeing in other jurisdictions throughout the region, throughout the world, what, internally from compliance, from an M&A perspective, how do you sort of try to get your arm around these issues when you sort of do business and sort of think about acquisitions?
Okay, so good afternoon, everyone. Thank you for having me. Good to be back. I was an LLM here 2003, 2004. So thank you for having me. I think the perspective that I can offer is, even though we haven't been active, we, Anheuser-Busch InBev, we haven't been active in Brazil in terms of doing M&A. We've continued to be active in M&A elsewhere, and we just finished over a year-long process combining with SAB, and it was, to me, having been involved in the deal, it was very interesting to see two things. I think how Brazilian institutions and precedents are traveling the world, and Brazilian regulators have become, in particular CADE, how CADE has become a reference for many other regulators throughout Latin America and Africa. So when we were negotiating the remedies in the 11 jurisdictions that we ended up having to negotiate remedies, we constantly came across local authorities referring to CADE precedents and CADE practices, and that's, to me, having been outside Brazil, was interesting, very, very telling to see how institutions matter, and how in the world of today, if you're doing a global deal, you should assume that regulators will be cooperating with each other, will be learning from each other, and you, as in-house counsel, have to be prepared for that. So Brazilian institutions and precedents are traveling. To me, that was learning number one. Number two, Lava Jato is already going beyond Brazilian borders. So we've come across, particularly in Latin America, as we start seeing news that Lava Jato is expanding into the Dominican Republic or Ecuador. We have a specific divestiture process going on in Ecuador. And even though we have nothing to do with Lava Jato, right, we're selling a few assets there, but in our stakeholder mapping and as we engage with local Ecuadorian authorities, there's certainly an impact in terms of how we have to approach, and also how the local authorities also behave. They're very nervous. You start seeing delays, you sometimes see paralysis, and for us, again, having had nothing to do with it, you see that in today's world, these things immediately travel, and we have to adapt accordingly and be overly prepared. And then the third thing that, from our perspective, doesn't impact to Paulo's point, the structuring per se, but when it comes to compliance and how we do diligence in a public M&A scenario, which is the one we just went through, in the negotiations with SAB, UK-listed company, we have an SEC registration. We're listed on the New York Stock Exchange, so we're subject to the FCPA, in addition to other applicable laws in other jurisdictions. And we basically didn't have access to any information whatsoever with respect to SAB, its compliance programs when it came to money laundering, anti-bribery, and what have you. And so what we decided to do as we navigated between signing and closing was we decided to work with external counsel, work with forensic accounting firms, and instead of getting prepared for on day one to go in and start looking around, what we decided to do was we spent the months between signing and closing on developing an algorithm so that by the time we closed, we applied the algorithm, okay, in SAB's systems, okay, for payments. And during the process, we obviously piloted the algorithm internally, okay? And so by the time we were at closing, we had already run 2-3 pilots within our SAP system for payments, and we mapped our touch point vendors, we mapped keywords and fields within SAP where you have more liberty to fill in kind of what the payment was for. So by the time we closed, we knew exactly where we wanted to look for and apply the algorithm. And that just gave us a much clearer map to look for risks as we went in.
Different system that you guys were using?
Different system.
But you were able to apply the same algorithm?
But we were able to apply the same algorithm into their systems. Again, and this is obviously takes time.
No, clearly. How long was between signing and closing that?
Oh, we signed on October 15,
okay,
and we closed on October.
So you certainly had the time.
We had the year to plan.
You had the year to do, otherwise something like that's difficult. So
but again, the reason why we did what we did, apart from lack of information, was twofold. One, to Paulo's point, this was not about finding things for purchase price adjustment type conversations. This had everything to do with identifying risks and obviously mitigating them, but finding a way that we can operate going forward, because that's where the value is.
Was it the first time you implemented an algorithm like that
Yes.
in a due diligence process?
Yes, it was the first time. And then the second objective for us was also related to cost, because from our perspective, we didn't see value in hiring external counsel and forensic accounting firms to go in our case, into over 20 markets to produce a detailed report, which frankly no one is going to read.
And also you had signed, you'd have to, it'd be difficult unless there was a huge, to renegotiate.
Exactly. So our decision, our kind of internal compliance decision was let's get ready and be very surgical and tactical when we go in and how we go in, and quickly identify and have our risk heat map, but looking at their systems, their internal controls, to identify risk.
Question for you in that deal. Did you have, from a risk protection, did you have rep and warranty insurance or just an indemnity?
No, we just
a normal indemnity. No, it was interesting to see.
No, we didn't have. This was a public M&A deal.
So
there was
that's
nothing.
right. Public M&A is nothing. Interesting. One thing I haven't done is come across recently a rep and warranty. There's a rep and warranty. I don't know, Peter, have you done anything in that space where you've seen if a rep and warranty insurance policy, how they would deal with sort of issues regarding FCPA or corruption as a representation?
Yeah, we have yet to see a rep and warranty deal done in the Brazilian market. What we have found, though, actually, is in doing some multinational acquisitions where there are purchases of companies all across the world, the policy that you get will be very much a function of the quality of the diligence report.
Absolutely.
So, for example, if you don't choose to hire diligence in a particular country, the carrier will simply
They're,
carve it out of
they're
the
carving it
policy.
out. Everything, yeah, no diligence, no. It's just an interesting theme as our.
And the other problem with rep and warranty policies, just to close the loop on it, is any issue that's actually identified in diligence won't get covered under the policy.
Right, exactly. If you know
So,
it.
right, so to some degree, it's a real question as to how much value it has.
Then you negotiate your reps at the end of the day, sandbagging whatever to see what you're going to get. Absolutely, yeah. We're in a process right now. We've signed, and we're doing rep and warranty insurance, the exact same thing. We don't really want to do much more diligence because it won't be covered under the policy. It's interesting, but we are seeing in different Latin American jurisdictions, but I haven't seen in Brazil yet. But I think it'd be a very interesting exercise as there's more deals and becomes more consistent to use rep and warranty insurance, how it deals with some of these issues. I mean, obviously they'll try to carve it out, but if diligence supported, it would be very interesting to see how that risk is allocated. Thank you, Lucas. That's helpful and interesting. We're going to turn to Adriana, and it's a different discussion, but equally as topical. I mean, we talk about reform in Brazil, and for a long, long time, you know, there are limitations as to ownership of land by foreign investors, certain deemed strategic lands in agribusiness, and obviously it's frustrated a lot of people who've been trying to do business in Brazil. We've had clients who come to us from either in the region or from the United States said we'd like to buy X, and because it's certain land that cannot be sort of controlled by foreigners, it's been disappointing. I guess this administration has proposed maybe relaxing some of that regulation. Adriana's going to talk to us about where that reform is at, what she's seeing in deals, and how people are structuring now and have structured around it.
Okay. So, well, we've been working with the firm on agribusiness and forestry deals for a long time. I'm sorry. I got a little cold. And what we have seen is that it has been decreasing a lot. The foreign investment here has been decreasing a lot after the enactment of the AGU ruling from 2010. So basically what happened in the environment, I think probably most of you know about it, but we had a law from 71 that said that the investments made by the foreigners couldn't buy rural real estate in Brazil. Not that they couldn't, but they had some restrictions for it. So those restrictions were basically based on size of the land and on the control of the company. Okay. Then the Constitution of 1988 came and equaled the Brazilian companies with foreign capital and Brazilian companies with Brazilian capital. And what happened was that, as from this constitutional decision or definition, what happened was basically that the foreigners could just incorporate a company in Brazil that would be a Brazilian company. It didn't matter if it was owned by foreigners or not. And with that, you were able to buy and lease real estate like some kind of freely in Brazil. Because of that, after a while within the Dilma administration, a lot of foreign investment came into the country, and they were a little bit worried about what was going to happen. So the Attorney General issued an opinion interpreting this law from 79 and saying that, well, these companies that are, although Brazilian companies, but the ones that have majority of capital owned by foreigners are not Brazilian companies for the purpose of that law. So they are considered foreign companies. And because of that, all the restrictions that were in the law would apply. The restrictions were also basically, you had to present a project for what you're doing, and you have to request for the INCRA, which is the National Institute of Agrarian Reform, you have to request an authorization to buy the land. That was done like all of a sudden in August in 2010, where, well, a lot of deals were going on, mostly with regard to agribusiness and forestry. And people were caught up in the middle saying, what do we do now? I had a case that was going on at that time, and the parties had signed basically all the agreements except for the closing agreement. And the problem was that what do we do from now? The diligence done, everything was ready to go, to move forward. The capital was here, no, there, actually. So what happened was we tried to give we tried to just have some alternatives for them to do that. This has been affecting a lot the M&A deals within this area, mostly in the forestry investment. There's a lot of funds here in the US and in Europe that have a lot of allocated money waiting to be invested there. And the clients are trying to do whatever they can. So everybody was very, very happy, like on February, 2 months ago, Mr. Enrique Mireles announced that the government would suspend these prohibitions or these restrictions within 30 days. So of course the phone rang every day. What are we doing? What are they doing? What's going on? What's going to happen? Well, I was a little bit skeptical about that when I heard, because after 7 years, when that was issued in 2010, I just said, oh no, the government is going to change, and this is not going to continue. There will be changes for sure. And my clients were already calling me again and saying, come on, it's been 5 years, and now it's been 10 years. Oh, now, did you see that? I said, well, I saw, I just don't know where is it going. But anyway, so after that, we just knew I was following up on this matter for a couple of years. And there is a law, there is a bill of law, which is in the Congress to be voted, which basically makes a big, it's going to be like basically free, okay? But the 2 points that they are discussing a lot are the limitations on size of the land that could be owned by foreigners, and the obligation or not to present detailed information about what they are going to do, what the investor is going to develop. And actually, if this is going to be effectively supervised, because if they have to present then you say, okay, who's going to check if this was done or not? First of all, we were told that this was going to be done by a medida provisória, which is basically a governmental decree.
Yeah, but that was one of my questions. Could it be done by government decree, or Congress had to approve it?
Yeah. But then people said, okay, but this is only going to be valid for 30 days, and it has to be approved, and it's not going to happen so fast. So the idea is there is a new bill of law which is trying to change a little bit the whatever was in this bill of law from 2012, which proposed like innovations, but basically that's it. The idea is not to restrict, but only the restrictions that are going to be in place still would be for sovereign funds and state-owned companies. So at least we guarantee that the money that is invested there stays there, is used for the country. My idea, I would love to say that this is going to be resolved in 6 months, but I really don't know, because every day there is a new thing. So there is the social reform, there is the tax reform, there was the impeachment, and this has to be voted. But we are really expecting that because the new government is really intending to open this door for foreign investors.
So at the end of the day, the thought is that foreign investors wouldn't be subject to the current limitations, and there'd be a lot of money pouring in to the agribusiness, we would hope.
God helps us.
But then we have, as you said, pension reform seems every day to be changing. I can't keep track of what happens every day in terms of the proposal, keep on shaving it down and loosening it up. So politically, after, I guess, what happened last week with the whole Odebrecht sort of tapes going public and a lot of people in the holiday, I don't know what's happened this week in terms of the announcement of pension reforms, but it keeps on moving, but moving slowly and being curtailed. That's probably the one that's going to go through first, theoretically, I guess, pension reform, if we can get through, theoretically. And then after that would be tax, and then agribusiness, hopefully after that, or theoretically.
I would hope it goes before, because it's much smaller than that, but
it's certainly important for transactions, for investors. People for years have been talking about that, and certainly have had clients that formed local companies to basically take advantage of it at certain points of time. I guess, we've talked a little about general ideas and agribusiness, but sort of the ideas of Lava Jato and what's happening in reforms. I guess Peter, from a U.S. practitioner perspective, and I know you've been working on some transactions recently and historically, what are you seeing in terms of appetite by some of your clients and deal structures in light of sort of this uncertain regulatory environment? But it's sort of interesting. We have an uncertain regulatory environment, but it's certainly a more positive economic environment.
Right.
So you have this puzzle where clients certainly are motivated, and I think clients in Brazil are motivated to sell certain industries particularly, and pricing is less sensitive. Then you have a lot of uncertainty through 17 and the election in 18.
Sure. So yeah, happy to talk about that. I mean, look, I think what I would say about Brazil, it has always been true, but is now more true than ever, which is it is a great country for tourism and not a good country for tourist investing. Okay, you should not be investing in Brazil if you don't know what you're doing. And I think that our perspective tends to be mostly one from private equity. That's those are the investors that we work with the most. And private equity actually plays a very significant role in Brazilian M&A. It is a very strong contributor towards M&A activity in the country. And private equity actually occupies a unique position in Brazil as compared to other emerging markets for a couple of reasons. Number one, unlike many other emerging markets, Brazil has an incredibly strong local PE tradition, and frankly, even international funds that are deploying money into Brazil are managed, and the investment decisions are being made by Brazilians. That's hugely important, right? You need to have boots on the ground. You need to have people who know the market. You need to have people who are familiar with the specific country risks and able to differentiate opportunities. Just some quick numbers. Since 2011, something like $20 billion has been raised for Brazil-specific private equity funds, with $17 billion deployed over the same period. So that's a very huge contributor towards M&A activity. But I think one of the issues with private equity, and that's it's certainly true in the United States as well, but it's also true in Brazil, is it is very much a counter-cyclical business, right? If you look at the performance of private equity funds, not just in emerging markets, but globally, funds that raised money during down cycles in the economy and deployed it during down cycles and were able to sell during up cycles had great performance. And those funds that did the reverse had not such great performance, right? And again, when you're talking about a private equity fund, you're talking about an investment vehicle that has a 5 to 7 year investment horizon. So essentially they're deploying capital now, and they're projecting what their exit's going to be 5 years from now. And so when you're dealing with a country that has macroeconomic risk to sort out, you're essentially deploying money now and saying, what do I think the Bovespa IPO market's going to look like 5 years from now? What do I think the willingness of strategic investors to buy this company will be 5 years from now? And so, needless to say, there was a tremendous amount of money raised in 2010 and 2011 when the Brazilian economic prospects were looking very up, right? And unfortunately, a lot of that money was raised in the international market in dollars at a time where the exchange rate was, a dollar to something like 1.5, 1.6 real. And that money got deployed, and then, later on, the real depreciated. And so many of the investments, which were actually good, solid investments, and actually in real terms returned decent returns, are actually not even returning capital to the international investors who put out money in dollars. So there are some investors who feel, I don't want to say burned by it, but certainly didn't do well from investing in that cycle. If you fast forward to today, though, I think that there's a lot of optimism on the part of Brazilian private equity managers to look at the economy today and say, look, we actually think that the valuations, which were way too frothy in 2010 and 2011, not just because the economic conditions were frothy, but also because the real was overvalued. Now that you have the real in a much more realistic zone, if you go out and you raise $1 billion in the international market, you now have something like, anywhere from 2.5 to 3 billion of reais to spend, which is an enormous amount of firepower. And the prospect is, if we're able to deploy now, take advantage of dislocation, distressed sellers, all of these things, we'll actually be able to capture a wonderful premium 5 years from now when we think the IPO market will be back and there'll be more liquidity. Now, obviously, the counter to this optimism is getting investors comfortable that you are actually able to evaluate investment opportunities from the perspective of risk and compliance and FCPA and all of these types of things. And I think that's where actually confidence in the underlying fund, the investment manager, becomes so important, right? Because you're actually not going to want to deploy money to invest in Brazil with somebody who's unfamiliar with the market or doesn't have experience in determining what issues are real or not real. That being said, at the end of the day, right, anything that you do, any deal you do in Brazil, you have to assume is not going to be, 100%, no risk, company has, no issues whatsoever. That's just not the reality of it. And therefore, the types of investors who are going to allocate to private equity over the next 3 to 4 years are going to be people who are, bullish the long-term prospects of the country, but willing to tolerate some risk in that regard.
I've heard a lot of investors, people are saying people who've invested in Brazil before are the ones right now, given the uncertainty, the more lever, going to put more willing to put money in. People who, companies or private equity investors that haven't are reluctant. They sort of want to see in an election cycle, they want to see the economy change, they want to see the reforms by and large. They'll put a little of their money, but the traditional funds that are active that we're seeing are people, as you said, they have big funds locally, they've been in Brazil for many years, they understand the asset.
Right.
Question, Peter, what are you seeing in terms of specific sectors where people are looking at more than a couple of years ago we saw everything from retail, we saw, everything. I'm hearing a lot more about infrastructure as being sort of really exciting, and obviously the sale of some of the assets of the construction companies. Similar, or you're seeing different things as well?
That's right. I mean, in the boom cycle of kind of 2010, 2011, it was a very consumer and retail focused.
Yeah, exactly.
And basically the thought was anything you touch in the retail sector will just be a home run.
And education too.
Yeah, and then there was a pivot towards education because there's so much demand in Brazil for supplement to public education. I think what's happened in the education sector is that to some degree it's topped out because there's been so much consolidation and it's not clear how much there is left to buy. There was then a pivot towards healthcare because that is another sector where Brazilians are really looking to spend money to supplement the quality of the care that they're getting. And we actually saw quite a bit of activity in the healthcare sector. And again, there was a little bit of a distressed seller aspect to that too. As you guys know, BTG sold its interest in Regidor to Carlyle as a result of its liquidity issues. We're also hearing some talk about tech. That there's some hope that that Brazil will actually become more of a tech hub than it is today, and there's actually a good bit of optimism about that. And then on the infrastructure side, it's actually quite interesting. There is a lot more talk about infrastructure from the private equity side. A number of the sponsors have raised infrastructure vehicles. I think one of the challenges has been, how do you define infrastructure and what do you invest in? Because if you're investing in actual projects, those tend to be more difficult for private equity to invest in merely because those are very, very long-term investments. And frankly, with the prior government, the profitability of those projects was simply not at a level that justified private equity entry into that. And therefore, what private equity tended to focus on when they called something an infrastructure investor was actually more supply chain investing. It's really more investing in the companies that provided services to the infrastructure sector. Sure. And what we're actually seeing more of now is with some of the liberalization of the auction processes, more of an interest on the part of private equity firms, probably by forming specific vehicles that have a longer-term investment horizon, 10 to 12 years, to actually invest in projects, usually in partnership with a consortium of operators. So I think that will actually be an area of real interest.
Increased activity, and we're seeing that as well. And I think that will be, hopefully with liberalization, it's a big deal. But I didn't mean to interrupt you, but fintech, we're seeing there has been a lot of private equity going in, and it sort of seems that the central bank, with the changes on regulation, with credit cards, et cetera, is trying to open up the system to make it much more competitive. And that's another form of liberalization of reform positive, that there's concentration risks in terms of, there used to be certain credit card companies like exclusive, that's been taken away by the central bank in the last year, and that's opening up reforms and giving opportunities right now to people coming into the market. And I know there's a lot of private equity and VC investors going into Brazil right now. They're also looking at fintech spaces because of a lot of competition in the credit card industry specifically, which is another reform, not as noteworthy, but certainly having a big impact on sort of that industry as we see it right now. Peter, anything else?
Yeah, the last thing I'll just mention is that one area of private equity investing, which has kind of lagged behind developed markets, has been distressed debt, right? There has actually not been a lot of pooled capital investing into distressed debt in Brazil, and we're actually seeing some real interest in doing that. There are some specific vehicles that exist under Brazilian law to invest in distressed credits, and we've had a number of conversations with some of our emerging market distressed debt shops about whether they can actually get into the Brazilian market. So it may be that as there is a cleanup of some of the debt that's on the balance sheet of the banks, that you may see more of that.
That's right, and I guess one in sort of another for private equity, it's a new product in Brazil, litigation funding.
Yeah.
And that's sort of new, and my understanding at the CVM there is actually a new litigation fund, which first one that's about to be approved, and that's sort of exciting. I think the value is around $100 million they're trying to have raised. And that would be sort of a beginning of a new trend, and that's sort of another positive movement in terms of the economy and opportunities in terms of investing. I guess for everybody on the panel, is anything you want to address before I make some short closing remarks? Anything that we think should be of interest that we didn't cover that's particularly noteworthy? Paolo, anything in terms of your feelings about where this whole Lava Jato investigation is going to, who's going, et cetera?
I think there are two things that I would like to say. The first